In today's interest rate markets, let's take a look at the 10-year note futures today as they're realizing some volatility here today. We're seeing some pretty sizable price swings as the market digests several items today. Had to contend with a few things, data release this morning and a bond auction this afternoon. And we're looking at the 10-year future right around 133 now. That's the low end of the range for today after trading in the middle of the 133 handle for the better part of the day. And I think a couple items here to point out. Number one, CPI released this morning, much stronger than anticipated, played into the inflation storyline, at least initially. We did see selling pressure in the Treasury markets, and particularly on the 10-year futures initially, and we saw yields push higher and actually push up on the day. And then about an hour later, we saw yields come under pressure and the bond market rally, the Treasury markets rally. And it was an interesting dynamic after the release of that CPI data. It appeared that the market was going to discount that heavily. And then this afternoon came and we got the release of the 30-year bond auction results. And they were quite disappointing. At least the market took them as such. Bid to cover was much lower than anticipated. Yields were higher than anticipated as far as what was the prevailing yield on that auction, and therefore we did see some significant selling pressure in the Treasury markets, yields pushing to the highs of the session and currently holding just off of those highs. So when you look at the 10-year note futures, well, I should say the 10-year note yield, let's get to that, 141 basis points, and that's up from 136 basis points yesterday. So again, a 5 basis point move there, and we are seeing the entire yield curve shifting higher today as we are seeing the 1 year through the 30 years now selling off, and therefore we're seeing yields pushing higher on the session.